Yesterday was a historic day in the markets. We saw one of the biggest reversal ever in oil, where prices surged earlier on fears of escalation in the Middle East and then completely flipped by the end of the market day. And we saw stocks did the same thing. Initially, markets were selling off hard, but by the close, the entire move was erased and the indices actually finished green. So we are literally watching history play out in real time. But this does not mean that everything is over, right? Because markets now are reacting to what Trump says as new headlines come out almost hour by hour. And Trump has come out saying that the response will be very complete and that the US could hit Iran 20 times harder if things continue to escalate in the Strait of Hormuz. So in today's video, I'm going to break down to you what is the latest updates on the war, what caused oil prices to move with such a huge volatility, the three key answers markets are waiting for, and what all this could mean for your portfolio ahead of this week. Now, before we begin, if you do enjoy this kind of market update content, do subscribe so you will always be kept updated of the next video. Now, let's look at how the indices reacted yesterday. This is the SPY daily chart. You can see that on initially when the market opened, we did break trend, but we still closed above the 100 EMA point right over here, which is a good sign. However, we are not entirely out of the woods yet as we are still within this range that the market has been trading since December 2025. So we do have to see if the market actually pushes it up to the 50 EMA line, which has been a pretty strong resistance as well. Now, moving on to the Dow Jones. Dow Jones, you can see it tapped on the 200 EMA right over here, showing that it is actually a very, very strong support and is closing above the support line right over here that we drew as well a few days ago. So, and it's still pretty uncertain because as you can see, it has a much bigger reaction than the S&P. But we do also want to see it go above the EMA lines for the move to be a bit more certain, at least in the next few weeks. And moving on to the Nasdaq. Nasdaq is actually showing very, very strong resilience over here. And it is also because of the recovery in the tech sector. As you know, tech sector has been sold down over the past few weeks. And right now, with how Nasdaq has been rallying over the past few weeks, it's showing some strong resistance that there's some recovery in the tech sector. Support line is holding up very, very well. You can see we are also retesting the 100 EMA, but similar to the S&P, we are still within the same range that we have been, and actually this was since October 2025. As well as the 50 EMA, you can see it has been a pretty strong resistance since early February. It's been trying to test it more than 3 times, but it failed to break. So we do want to see a sustained close above the 50 EMA, after which that will also bode well for the entire tech sector. Now, what was the cause of all the volatility that we saw in the market? It was because of oil prices. So as you can see the image over here, this is actually an image of US and Israeli attacking Iran's oil refinery over the weekend, which caused a major blaze. You can see it was toxic clouds all over Iran. And because when it was an attack on the oil refinery, what was the implied conclusion? It is that supply of oil will be restricted again. And when there's lesser supply, demand will increase and price will increase. And this was the whole reason why when the future markets opened on Sunday night, we did actually see oil going all the way up to $120, as well as right before the market opened yesterday. But immediately after this reaction, over the past 24 hours, there were a lot of news. So I'm sharing it more in chronological order. So this was the first thing that came out on the weekend. But few hours later, there was an emergency meeting of the G7. So who are the G7? It is in short for the Group of Seven, which are Canada, France, Germany, Italy, Japan, the UK, and US. So these are like major nations, right? And they actually meet to discuss about global issues. But they actually held a emergency meeting to release 400 million barrels of oil. This is the strategic reserve as price tops above $100. So although reserve will not immediately release, this readiness, this emergency meeting to act successfully, it actually deterred further oil prices to go higher and further speculative buying as well. So as we know, oil trading above $100 now is driven by extreme market sentiments. Literally everyone is saying like oil will go up to 150, $200, and this is making the market potentially dangerous, especially if you are a retail investor. So this was what caused oil prices to actually pull back, as you can see this red candle right over here. Now, at the same time, right when the market opened, right after the market opened throughout the day, we did actually saw some recovery. But the biggest recovery we did actually saw 40 minutes before the market closed. So there was supposed to be a Trump announcement right after the market closed, so Eastern time of 5:30 p.m., where market was closing at 5 p.m. But there was a rumor that was front run. Okay, there was front run before Trump's announcement, and which cause you can see the last few minutes the market actually rallied. And this is what he actually said. Trump actually revealed that the Iran war is very complete pretty much, and that they have no navy, no communications, no air force. So market interpreted this as the war is going to end soon as well, right? And this is what led to the market recovering. Oil prices retreated, and that's why we saw that rally appear. And on top of that, Trump also came out and said that if Iran does anything to stop the flow within the Strait of Hormuz, which is what they have been threatening over the past few weeks, the US is going to hit them 20 times harder, right? So this is, in a way, you can say it's a threat, but it's also Trump saying that he is going to take control of it. He even said that he might want to take control of the Strait of Hormuz. Whether he can does it is another question. And yeah, this actually gave market confidence, because it may basically mean that the Strait of Hormuz will be back in business, and it might mean that what supply of oil will actually start moving again. And we saw all of this reflected in oil chart. As you can see, we were very, very close to the all-time high that was back in November 2022, when it was at $124. And you can see oil literally tapped $120 right at this point before retreating. This was when the G7 stepped in and said they were going to release the strategic reserve. And on the day itself, you can just see how the candle moves on that single day. It was the highest move in one of the biggest reversal over many, many years. As you can see, back in the 2022 times, we didn't even see that level of reversal on a single day for oil. It was only at March 2022, the last one. And in 2026, this was the first one that we saw for the year. Hopefully the only one that we saw a biggest move of one day, a total of 32% move in a single day for a commodity like oil, right? You can see it rise up all the way 30% and actually close down 30% as well. And we can see that right now it is coming to find some level of support. There's a little bit of push up back to $88. But right now, if you're looking at the levels of the next technical support, it is at this point right here around the 95 levels, which was a level that oil breached very, very easily. And right now it is testing this resistance. So we will see, what's going to happen in the next few days. Is things are changing by the minute, and anything can happen. Oil prices might push up again because of Trump said, oh, maybe the war is going to extend further, or based on the latest thing he said, we should see oil stabilize around this region for the moment. And when we look at volatility, right, you can see that it actually tested the resistance perfectly before this spike, right? How the volatility move. This was the resistance, that the all-time resistance back in April 2025. I would say that this was a special anomaly when Trump did the Liberation Day. What we have now is not, but this was a very, very strong resistance. It tapped $35 and it actually pulled back right now, and it even went below the previous resistance of $29. And I would say that at these levels at 25, VIX is still on the high side. Right, VIX is definitely still on the high side. As you can see that it's still around the higher region as well. So there is still some volatility in the market. Don't get me wrong. So that's the reason why I say that we are not entirely out of the woods yet. And over the next few days and weeks, as we see the situation easing up a little, hopefully, what we want to see is VIX slowly trending down as well. And this will be a much more stable and less uncertain sign for the overall markets. Now, moving on to crypto, we did also see crypto as a risk-on asset reacting to this move similar to stocks. It has actually broken above the 70,000 line once again, hovering around that region, but it's still proving to be a pretty strong resistance. As you can see, previously we had that push up to 74, which was testing the 50 EMA. But right now, it is stabilizing around the 70, which is a resistance level, right? And similar to how we've seen before, Bitcoin, we do want to see that gradual push upwards as markets becoming a little bit more certain. So it ties in with what we are seeing with oil, with what we are seeing with VIX, because there's still the level of uncertainty there. And until the market start to see some clarity, and then potentially we might see Bitcoin slowly climbing up, breaking above this 74 line. But right now, these levels over here, this whole region, I would say, is proving to be this consolidation level where it's more as a wait and see. And in terms of the support for Bitcoin, the good news is it's holding this 65, 66,000 support pretty well. It might hover between the range between the 62 and 66, but you can see it is still consolidating within this range as the market is still uncertain which way are they going to move in the next 2 to 3 months. Now, despite what we see across the market, certain recoveries as well as some levels of stabilization, volatility dropping, the truth is that the situation on the ground is still severe, right? So this was the what happened over the weekend, as I shared earlier, as well as we saw new wave of Iranian missiles drones actually targeting Gulf nations. So things are still developing. We are not entirely out of the woods yet. The war is still ongoing. Trump has said it's going to end, but how is Israel thinking about it? This is what we don't know yet, because they did also have appointed a new supreme leader. This is the second son of the earlier supreme leader that was killed. And this transition, right, if you know about the country, right, whenever their leader is killed, it actually makes everyone, the emotions rile up, right? And this is expected to harden their internal political and military stance, driven by the mentality of this next leader actually wanting to avenge his father. And this might also significantly reduce the probability of a rapid resolution. And shipping through the Strait of Hormuz, it still remains severely disrupted. There is definitely a lot more movement than we saw over the past few days, but traffic has not resumed yet. There are still some oil exports being blocked, storage tanks are filling rapidly, and Saudi Arabia and Kuwait is actually forced to reduce their production. And also restarting oil and gas production could take weeks to months, so that supply will still be affected. And that is probably why we see oil actually increasing a little bit because of that. And so if we do want to see a sustained rebound of the overall stock market, this depends largely on oil prices stabilizing. We haven't found that level of stable ground yet because it is still very, very fresh. And currently the markets are just waiting for the answers to these 3 questions. Number one, is shipping through the Strait of Hormuz back? As you can see, no, it is not back yet. Are oil prices falling? Yes, it has fallen below $100, but at that level of even at $88, it is still elevated compared to before the war. And last but not least, is Iran agreeing to the ceasefire? No, not yet. So you can see both are crossed. First and third is still not any consensus yet. Number two, are oil prices falling? There is a consensus, but it's still elevated. And if we do see oil continue rising, or all of these 3 continue delaying despite Trump, whatever that he's saying, this is where we will see certain fears coming back again. The biggest one will be stagflation. And this is where what is coming out this week, the February CPI data, is going to be a very critical macro variable, because this report will predate the recent March energy spike, and a cooler inflation reading might be viewed as outdated because the inflation reading will be for February before this war actually happened. But however, if CPI exceeds expectations while oil prices remain elevated, this is where markets might slightly reprice rate hike risk and price in stagflation concerns. Okay, so this is not good. If it exceeds expectations, means CPI actually goes higher, because it is already expected that there'll be some flow down to CPI as oil prices increase. But imagine even before the period where oil prices increase, if CPI is increasing, this will shock the market. Now, apart from the war, we do also have Oracle's that is going to report today after the market close. As you know, Oracle is one of the major computing infrastructure provider. They had a lot of deals, and over the past few months, they actually had a strong deal, and there was some concerns about them fulfilling their performance obligations. And its results could actually influence sentiments across the broader AI data center and cloud infrastructure. So the key metrics will be AI-related orders. People will be watching to see whether they are able to fund their remaining performance obligations, and as well as rising capex. So this will be what the markets are looking for. And when we look at Oracle chart right now, you can see that it has fallen pretty strongly ever since they announced this huge deal. This was when they had a huge deal with OpenAI. And it has been a very, very strong free fall since then. With that being said, it has been holding a pretty strong support around these levels around here. And we don't want to see what they are going to say and how their earnings will be, right? And if it bodes well, like how we've seen in Broadcom, like how we've seen in Marvell, we do expect to see a strong move towards the upside because it has been beaten down. That means expectation has been reduced to the bare minimum. But of course, markets will want to see them beating revenue, number one, beating earnings, number two, and number three, having strong guidance ahead as well. Something on the side, we did also see some new additions to the S&P 500 for these three companies, Vertiv, Lumitum, and Coherent, and EchoStar. Now, you might not know these companies, but these are all key AI infrastructure components, right? For example, Coherent actually does optical communication, Lumitum actually does optical network hardware, and Vertiv actually does data center power and cooling infrastructure. So you can see that now the S&P is also including all of these companies that are vital to the AI build up. So this actually shows very strong institutional conviction in this AI infrastructure team. And so despite whatever that we are seeing now, this is my overall take, right? To me, at least when we talk about the war, it looks like things might be moving towards de-escalation, which is generally a good sign for the markets. And at the same time, markets is still very sensitive to every word that Trump says. And this will be the main theme. So again, we are not entirely out of the woods. The initial reaction was good, but things will change over the next few days. Are we moving? We want to see stability because oil prices, yes, poor, but it's still on the high side. Okay. But one thing's for sure, even though we are seeing a lot of the headlines just talking about oil right now, one thing's for sure is that the main theme ahead for the long term is still AI. And we know that volatility is opportunities. You have to see it that way because markets has gone through several wars, crises, pandemics, and yet over time it still moves higher. So if you're holding strong companies for the long term that are in this theme moving ahead, AI, the plan doesn't change. In fact, this kind of pullback actually becomes opportunities for you to potentially add this kind of high quality names that will benefit as AI demand continues to stream in. That's what I have for you for today's video. If you do enjoy such content, be sure to hit that like and subscribe button. It will really, really help me to create more of such content for you. Thank you, and I'll see you in the next one.